Losing a spouse is one of the greatest challenges that anyone will face in their lifetime. On top of everything else, there are a number of financial to-dos. We created a series of 3 videos to walk you through a to-do list, near-term and intermediate-term actions. My name is Rick Wechter. I'm the founder of Old Peak Finance. We are a comprehensive financial planning firm based in Chapel Hill, North Carolina, and working with clients nationwide. And we've worked with a number of folks who faced exactly this challenge. So let's dive into the near-term actions. Number one, securing your cash and financial position. Make sure you have cash for at least 6 months of expenses, including unexpected expenses. And if you don't have that cash on hand, maybe it will come from a life insurance payout. If that's not available, then you might need to look at selling, for example, investment assets. Just as importantly as your cash position is to create a picture, a list of all of the assets and liabilities that you have. I'll go over more detail in a minute, but this is important for 2 reasons. First is it will feed into a financial plan that you will be creating to figure out whether or not you can afford your financial goals for the balance of your life, and if not, what adjustments you need to make. But this financial picture will also provide a roadmap to estate planning actions that you need to handle in the wake of your spouse's passing. Obtaining death certificates, typically you're going to want to have 5 to 10 death certificates because financial institutions as well as the government may ask for original copies of the death certificate. One great example is the life insurance company. If there was a insurance policy on your spouse, they will want an original copy of the death certificate before they process the death benefit payout. In claiming benefits, I mentioned not only the life insurance, but also Social Security, and I'll go into that in a moment. And then finally, confirming healthcare insurance. If you're on your deceased spouse's health insurance company plan, and if the company had at least 20 people, then you do have access. You can remain on that plan for up to 36 months. You may not want to stay on it that long, but at least make sure you have near-term healthcare insurance coverage for you and your dependents. All right, let's go to the sample financial snapshot that I mentioned before. You should create this kind of list of every asset and liability to your name. I've got a video that goes into much more detail on this, but let me just walk you through a couple highlights here. What's on this is the type of asset, the legal owner, the location, the approximate value, I'm going left to right, and the beneficiary, meaning the person that will own it when the owner passes away. And I'll give you an example by if we just look at the first item on this list. Joint bank account. Here, this is assumed, by the way, I should have said Dennis and Barb. Dennis is deceased. Barb is the surviving spouse. Here we have joint bank account that they own together at Wells Fargo, worth about $50,000. And it's as most joint bank accounts are, it's a joint tenant with rider survivorship account. That means that Barb automatically becomes the single owner of the account at Dennis's passing. No need to go through any court or legal process. Barb will want to eventually contact Wells Fargo to make them aware of Dennis's passing, but she doesn't have to do anything to claim ownership of the asset. This spreadsheet lists bank accounts, brokerage accounts, retirement accounts, life insurance, home, personal possessions, as well as any debts. For example, here we've listed mortgage and credit cards. Let's talk about Social Security survivor benefits. The funeral home will probably have already contacted Social Security to make them aware of the spouse's passing. If they have not, and make sure that happens. This is important for a couple reasons. First is if the deceased spouse was claiming a Social Security benefit and paying a Medicare premium, Social Security needs to know of his passing so that those end. But also, in many cases, the spouse, if they're minor children, the children will be entitled to survivor benefits from Social Security. Generally speaking, a spouse who's 60 years or older and not remarried can get the deceased spouse's Social Security benefit. The surviving spouse might want to wait because the longer you wait, the higher your monthly payout is, but you can get one as early as age 60. Then separately, any spouse who's caring for a child of the deceased, if the child is under 16, then that surviving spouse can get a Social Security benefit, monthly check. Also, the children of the deceased who are younger than 18, or if they're still in high school and younger than 20, can also get a monthly paycheck. There are details here about what the amount is, but generally it can be up to almost 200% of the spouse's Social Security benefit. So therefore, this is absolutely worth handling if you're entitled to the benefit. And then I also want to mention contacting credit bureaus and making them aware of your spouse's passing. There are 3 credit bureaus, Equifax, Experian, and TransUnion. You just need to contact one of them and they will contact the other 2. They will want an original copy of a death certificate. The reason this is important is to prevent fraud in case someone were to get your deceased spouse's Social Security number and try to open some sort of loan or credit card. If the credit bureaus have been made aware of your spouse's passing, they won't be able to do that. This will just avoid a hassle that you'll have to deal with. That wraps up the near-term actions. Please check out our video on intermediate-term actions that you need to address after your spouse's passing.